Hi, I'm Stock Investor Davis. Welcome to the channel. We're going to take a deeper look into DraftKings stock today, focusing on its earnings per share and price to sales ratio, both currently and based on the guidance management has provided, which in this case will bring us to December 31st, 2023 and 2024. Then we'll close by applying our findings to its current technical chart. Before we get started, please smash that like button and subscribe. There are chapters below if you want to skip ahead to a certain section. And if you have any questions or notes, let me know in the comments. To begin, I have at the top DraftKings current earnings per share for the trailing 12 months, totaling a minus $2.17 per share. The quarterly earnings making up that figure is in the top right. Once this was calculated, I pulled the company's past earnings and PE ratio results, finding a few items, but most importantly, this company has yet to reach profitability. Therefore, we are unable to calculate a fair price range using this metric, and will need to rely on its price to sales ratio. Moving to the company's current price to sales ratio, we have a similar setup to the previous slide with its current trailing 12-month sales at the top, totaling $3.29 billion, and the quarterly sales on the top right. We then pulled the company's current shares outstanding, which is 465.9 million shares as of its last earnings report. We divide those two figures to arrive at a sales to shares figure of $7.06. We'll come back to this figure shortly. Similar to the previous slide, I pulled the company's past sales and price to sales ratio results, finding a reasonable range of between 3 and 5 times sales over the past 2 years, with an average of about 4 times sales. This range and average has come down tremendously as the company has rapidly increased its revenue since going public. We'll continue to monitor this metric as it is likely to fluctuate over time. Based on our current reasonable range and the current sales per share, we're able to calculate that a reasonable share price is between $21 and $35. With the current price around $35, it's right on the line between fair and being overvalued, heavily favoring the seller. Let's now look at guidance. Looking at management's guidance, they have provided the following projections for its fiscal year end December 31st, 2023. Revenue to be roughly $3.7 billion and an adjusted EBITDA of negative $105 million. Through some digging of my own, I'm estimating if we undo the management's adjustments, the company will end the year with roughly negative $693 million in net income. This figure divided by the presumed shares outstanding will improve to a negative $1.49 per share. Similar to our previous slide covering earnings per share, because it's a negative value, we are unable to calculate a fair value range based on this metric. Pivoting to the price to sales ratio, based on management's guidance, we can see the shaded portion is the same as the previous slide, so I'm going to focus on the unshaded portion. Using management's guidance, we can calculate a future projection for sales per share of $7.93. Then multiplying this forward guidance by our reasonable price to sales range of 3 to 5 times sales, resulting in a fair value stock price between $24 and $40. The result being that the current price of $35 is still within our calculated fair value range and on the seller side, but has pulled back more to the center of the range. Now looking at management's 2024 guidance, they have provided the following projections for its fiscal year end December 31st, 2024. Revenue to be roughly $4.65 billion and an adjusted EBITDA of $400 million. Again, through some digging of my own, I'm estimating if we undo management's adjustments, the company will end the year with roughly negative $215 million in net income. This figure divided by the presumed Shares outstanding will improve to a negative 46 cents earnings per share. Similar to our previous slides covering earnings per share, because it is a negative value, we are unable to calculate a fair value range based on this metric. Also worth noting that I do expect these figures to change over time as we get closer to the actual date. Pivoting to the 2024 price to sales ratio based on management's guidance, we can see the top shaded portion is the same as the previous slide. So I'm going to focus on the unshaded portion. With the management's guidance, we can calculate a future projection for sales per share of $9.98. Then multiplying this forward guidance to our reasonable price to sales range of 3 to 5 times sales, resulting in a fair value stock price between $30 and $50. The result being that the current price of $35 is within our calculated fair value range and now favoring the buyer side. Again, I do expect these figures to change over time as we get closer to the actual date. As a summary for our price to sales calculations, at the top we see where it stands today, and on the bottom we have a forecast based on management's guidance for year-end 2023. There is no comparison to be made at this time for its earnings per share due to its unprofitability. Finally, to wrap up by looking at the technical chart, I've added some boxes to highlight areas where, to me, it makes sense to either add to the position in green or take profits in red. Otherwise, we have noted that the stock has been in an uptrend since January 2023, currently near the bottom of that uptrend. Right now, it is just within our established sell box, but not overvalued necessarily. For me personally, it doesn't make sense to take profits at this point based on the current price, our forward projections, the uptrend noted, among other factors. Overall, I'm okay with the price. Let me know your thoughts in the comments below. Thank you for watching. Please like and subscribe.